I mean, this is essentially, very much on our minds. And of course, the historic correlation between international bond yields and euro area bond yields uh, is something that we can respond to. So if you like, the fact that we responded in our March decision by stepping up the pace of purchasing is a reflection that we can uh, uh, decouple, if you like, the trend in the international bond market with the trend in the euro area bond market. I mean, I don't say that's 100% decoupling, but I mean, it's also the case, as you know, that the increase in yields in recent times in the euro area has not been up to the same scale as in the US. And in the end, I mean, it's for us to determine, as we did in the March decision, based on a joint assessment of what's going on in terms of financing conditions and also what we see in terms of the inflation outlook. That will determine how much we react in terms of the scale of asset purchasing.
Your Dutch colleague stepped out saying that the scaling up of the purchases should only be for a certain time until, we see a substantial calming down, perhaps, in the market reaction. Would you agree?
Well, I mean, I think behind that comment is it's the underlying that comment, and I think our shared view is essentially it depends on the pandemic. I mean, of course, the program, the PEP program, is centered on the pandemic emergency, and as we've been discussing, right now there's a lot of uncertainty about the coming weeks. But I've also emphasized we also think there's going to be a lot of vaccinations in these weeks and months, and we've tried throughout to recognize that the uncertainty is a dominant feature, and no matter how the pandemic plays out, whether it plays out with some disappointment or whether there's some acceleration of good news, the PEP is designed to be flexible and to respond. So, when Klaas was speaking, he provided a conjecture about one pathway, but the more overriding theme, I think, is with the uncertainty about the pandemic, the PEP will adjust in a flexible way to make sure that financing conditions remain favorable, and in particular, that they remain supportive of countering the pandemic shock to inflation.